selling pressure, all right, some profit taking can come back, could be the next upside targets after, right, the short-term trend was up since September. Very strong rebound with the first rate cut by the Federal Reserve coming in about 3 weeks back, and also with the Chinese government introducing stimulus measures to spur the entire economy. We have seen renewed strength in the markets. Of course, there's some profit taking over the past few days, but where are we right now for the markets, especially for the Dow Jones, the S&P 500 index, and even the Singapore market, the STI, the Straits Times index? Where are we right now? Are there any new support levels that have came out? Are we still looking bullish? Can we potentially hit even higher? Hey guys, Joey here, top tier retail trader in Flip Securities, and in this video we'll dive into the three most popular indices: the Dow Jones, the S&P 500 index, and also the STI, to see how we are doing for each of the markets. What are some of the new targets that have came out, maybe support levels that we need to hold above for the uptrend to continue even higher. Let's dive into the Dow Jones right now. So this is the Dow Jones trading at about 42,512, right? So just about 3 weeks back, I mentioned that we had the first rate cut of 0.5% by the Federal Reserve after rates staying elevated for more than 2 years due to inflation and all that, right? So now we have break a very key level. It seems like we're still holding above this new support level for the Dow Jones. So let me just share with you what has happened over the past like 2 to 3 months. You can see that we had this resistance level around the 41,500. Look at this, somewhere over here, right? Somewhere over here. About 41,500, it was a little bit of a resistance level. You can see resistance, near it, resistance, but just about 3 weeks back, you can see we broke above this 41,500, 41,600 resistance level. Now that would be like the new support level. So not too bad, right? It seems like we're still holding above this new support level. Let's just call it 41,500. I think as long as we stay above this new resistance turn support, right, the market looks bullish for the Dow Jones. You can see that over the past 2 weeks plus, we are pretty much moving sideways, consolidating. A couple of bearish candles, some bullish candles came out, but pretty much sideways, I would say. And in terms of the trend in the short term, you can see that the 20 days moving average, this green line, represents what we call the short term trend, right? So with prices breaking above the 41,500 here, just 3 weeks back when we had the first rate cut, the 20 days moving average line started to slope up even more. Right now, you can see it is still sloping up. So the short-term trend still looks okay, even though it's moving sideways a little bit over the past 2 weeks, but it still looks okay. And in terms of the longer-term trend, so I mentioned in my previous video last month as well, when we did the market analysis, that the longer-term trend actually has been up since last year, right? Looking at the 100 days moving average, the rate and the blue line, you can see the red and blue line, they're both pointing up 100 days above the 200 days moving average, and it has been up in the longer term, right, since like beginning of last year. So longer term trend has been up. Of course, in the short term, we can see some volatility, a bit of weakness here and there, but essentially it pushes higher to find a new high. So not too bad as well, all right, in terms of it consolidating and pushing higher. So right now, I would say that we may have found a little bit of a resistance, maybe right over here at this level. That would be probably around that 43,000 to maybe 42,800 level. You can see somewhere over here. Let me just go to draw some, this zone whereby we may see a little bit of selling pressure coming out right over here. I think that's where potentially, right, some selling pressure, all right, some profit taking can come back for the Dow Jones, right? So even though the short-term trend is up, right, we may hit to that level. You can see a couple of candles whereby sellers just came back and pushed prices down on this day as well, all right? So that's where we may just consolidate for a while below that 43,000 for a while. It could be like 1 or 2 more weeks, maybe 1 month, maybe 2 months. But I think as long as we stay above this new support, right, 41,500 or maybe even 42,000, right, the support may be, raise even higher if we continue to stay above 42,000. But right now, let's just put 41,500. I think if we stay above there, it still looks pretty good. The uptrend looks intact. That is pretty much the range for the Dow Jones. And if we do break this 43,000, well, targets can be revised even higher. That's where we can continue to move to a higher consolidation phase again, whereby targets can be raised even higher. Okay, let's move on to the S&P 500 index right here. The index is a very popular one that accounts for the top 500 companies in the US at about 5,792. So in my previous video, I mentioned that we broke one of those very key resistance level for the entire market for the S&P 500 index, and it seems like we are still holding above this new support level. So what level is this? Let's do a quick recap. It is the 5,650, right over here, 5,650 to maybe 5,660. You can see that was originally where we have seen selling in July. We sold down, same thing in August, September. We sold down, but finally, right after the first rate cut, we saw 3 weeks back, right, somewhere around 18 September, right over here, we broke above this 5,650 or 5,660. So let's just say 5,650, 5650. I think that level 5650 would be kind of like the new support level, resistance turn support level. If you to stay above this level, this support level, it looks pretty okay. The uptrend looks intact, right, all the way to maybe some obstacles, all right, right over here. I think maybe around the 5,800. So that would be what we call a near-term resistance. Over the past 2 to 3 weeks, you see that we are just moving sideways. It looks a little bit like the Dow Jones, right? Even though the short-term trend, the 20 days moving average line is pointing up. Right now, it's still pointing up, but prices were just kind of like, just moving sideways a little bit, in that range of 5,650 to 5,008. So it seems like yesterday, pretty good move, right? Pretty good move. We're attempting to near the 5,800. I think it closed at 5,792, right? Just about 8 more points, and we might hit the 5,800. So 5,800 would be a psychological resistance level for 2+ weeks. We're below it. If we can break that level, great. I think that is where targets can be revised for the market again, all right? Especially if you're trading what we call the S&P 500 ETF that tracks the entire S&P 500 index, right? That's where you could take the position in the ETF if you want to take a play on the entire market as well, right? So not too bad. I think above 5,008 targets could be revised even higher, maybe all the way to the next psychological 6,000. I think that could be the next upside targets after 5,008. But let me just go to put it right over here first. I think right now that is the range. That is the range from 5,650 to about 5,800. So it looks good. It looks good. I think the market still looks pretty bullish. If we have more rate cuts coming in, maybe by end of the year, maybe next year as well, I think that will be a catalyst for the market to push even higher. All right. And the longer term trend, as I mentioned in my previous video, it still looks pretty strong uptrend in the longer term since last year. In the short term, yes, turned up since August. Right now, it is kind of still pointing up. So if you found some value in the analysis so far, go ahead to give me a like, smash the subscribe button, hit the follow button so that you will not miss out on any videos like this, and it will definitely help out the channel as well. And if you want to understand or find out a little bit more on the entire strategy, the one good trend strategy, how do we actually pick winning stocks, when to get in, when to get out, how we have a system to help us on entry and exit as well, attend one of those free webinars, right? The link's right below. Click on it, register for it, and I'll see you in those live webinars whereby I'll share more with you in detail. Okay, let's move on to the Straits Times Index, right? The STI that's turned pretty bullish as well over the past few months, especially after having the rate cut in the US, right? So we are now trading at about 3,583, right? So before I talk about where we are right now, I would say that, since August, September, we have staged a pretty good rebound right over here from that 3,200. We approach the longer term moving averages are. You can see the red and blue line. You can see stage a pretty good rebound, and the key here is that we have broken some of those key resistance level that we have traded below for more than 2-3 years. So what level is that? Well, that would be the 3,500. So let me just go to draw this resistance. You can see that since like 2022, right over here, that was where we saw prices approaching, sold all the way back down, and all the way here as well. This was in 2018, right? It was actually a very key support level. You can see we're holding right above it for a while, for about 1-2 months. We broke down, and the downtrend happened in 2018. So I would say that 3,500 is a very key level. It was a support, it has turned into a resistance, and we definitely want to go above that level, stay above it for any meaningful reversal to happen for more upside. So let me just scroll back to where we are. And okay, before I talk about where we are, you can see that I have also drawn this resistance level right over here. So it's around that 3,650. So that is pretty much the all-time high, 3,650 in May, right? In May 2018, 2018. That's like about 6 years back, more than 6 years back, right over here, 3650. So I have this line right here, 3005 as a support, resistance, 3650 as a resistance. So let's see where we are right now looking at these two price levels. Let me just zoom in all the way to front again. Bam, right over here. You can see that these are the two lines we are right now. So this resistance at 3005, as I mentioned, we have broke above it. That is a good thing. That's a good thing. We broke above it somewhere in early of September in expectations of the rate cut. Right, you can see some bullishness coming back. You can see the 20 days moving average line started to slope up as well. So longer term trend from the red and blue line, the 100 days moving average and the 200 days moving average, it has actually shown some signs of the longer term trend turning up since the beginning of the year, maybe somewhere around like April, May. You see, right over here, we saw the 100 days moving average crossing up above the 200 days moving average, and we kind of like broke some of those temporary resistance, maybe around that 3002, 3003. So that's where we started to see some signs of buyers coming back, right, to push prices higher. So right over here, I think around April, there were some signs of the STI becoming stronger as well. All right, but let's take a look at where we are right now. So I mentioned we broke above that 3,500. Good, we are still above it. So let me just turn this red line to green in color, because this 3,500 would now be a very, very important support level in order for the uptrend to continue. So we have turned into an uptrend, right, since like April, May, right? And in order for this longer term uptrend to continue, we need to stay above this 3,500 new support level. And maybe if I can just draw another line, right, it seems like not just 3,005, but over the past 2 weeks, maybe we might have found another higher support level coming out, maybe at about 3,550. All right, so yeah, it seems like we're not really going down to 3,005. I mean, of course, if it comes back down and retests and go up again, but so far it seems like not 3,005 but 3,550 is a higher support that came out. And the 20 days moving average, look at this green line. As I mentioned, right, the short-term trend was up since September, very strong rebound, up, and over the past 2 weeks, right, over the past 1 week, you can see that this 20 days moving average, this green line has started from pointing up to maybe just flattening out, maybe the sideways, which is fine. I mean, it just shows that, in the short term, we are just moving a little bit sideways. We're just consolidating maybe in this range from 3,550, 3,550 to that 3,650. So remember, 3,650 was that resistance in 2018, which I've drawn, right? You can see, yeah, indeed, right, over the past 2-3 weeks, we have headed there, and some selling comeback. So I think it takes a while. I mean, 3,650 is what we call like an all-time high. It takes a while to breach that, resistance level. That's where we can see selling pressure coming back. So we might just consolidate a while in the short term from 3,550 to 3,650 is like a 100 points kind of like a range for a while. But just take note, right? If that, all-time high, all-time resistance level at 3,650 gets broken, I think that's where we may start to see more upside. All right, it could be a new phase for the entire market for the STI, and that's where target could be revised maybe to 3,007 or maybe to 3,800 as well. All right, so not too bad. I think for the STI, longer term uptrend intact. In the short term, we're seeing a little bit of consolidation, which is healthy as well. That could be an opportunity to get in as well on some of the good companies as well. I mean, if you're looking at the STI ETF, it could be an opportunity as well to get in, maybe near the support level. So that's it, guys. I've covered the Dow Jones, the S&P 500 index, and also the Singapore's STI. So I hope you have a better picture of where we are right now, whether are we still bullish, what are some of the new targets that have came out, and if we were to break higher, where can we potentially head to as well, and also the support levels that I've talked about for each of the different indices, like the 3,550 for the STI, right? If you were to stay above those support levels, I think we still look pretty bullish. It could be a bull market still, if maybe as we end the quarter, maybe even to next year as well, as more rate cuts comes in, that could be a catalyst as well, right? So I hope you like this video, guys. If you do, go and give me a like, smash the subscribe button, hit the follow button. That will help out the channel and you will not miss out on videos like this. And as I mentioned just now as well, go ahead to attend one of those free webinars whereby I'll share with you, I'll dive into the one good trend strategy in detail. All right, the link is right below. Click on it, register for it, and that's where I'll see you live in this webinar. Joey here. Thank you so much for watching. I'll see you soon.